John at moneytools.net here with an interesting case for the Blueprint calculator. This guy has $13,000 in savings. He's saving $240 per month. He also has $35,000 in credit card debt. He's on track to pay that off in 50 months. That's 4 years and 2 months. That's including the extra $240 a month going toward the debt payoff program. Now, he's also heard about life insurance. He's not in the best of health. He wants to make sure it's a good idea to get a policy now while he's paying off his debt instead of waiting. It is a good idea. It takes him 10 months longer to pay off the debt. So debts are all paid off in 60 months. That's about 5 years. And he has a death benefit to go with this for protection from day one. Now, 15 years from now, his cash values have also grown to more than offset the extra interest he pays to the banks for the extra 10 months it takes to pay off the debt, plus the interest that he paid on the policy loans. So let's go through how we designed this case and shared the numbers in the DP Blueprint calculator. I have the master file pulled up here on the screen, and now I'm going to bring over the template file that has also been opened. If you did not have this open beforehand, you would open the master file and then your template file. And we're starting with a blank slate here. So we're going to go to the MMA tab first. There's no cash flow data or anything that we need to do with the orange tabs, so straight to the blue tabs. We're going to put in the date, March 2021. And the cash flow, he's starting out with $13,000. And we'll put in the $240 that he's contributing to savings every month. Exit that cell, go back, click back on it, and I carry down with the Control-D keyboard shortcut. Also, in the Money Manager hold over here, we're going to put $5,000. We want to keep at least $5,000 on hand while we're paying off all the debts. So again, we exit the cell, go back to it, Control-D to carry down. On the Policies worksheet, we're not going to put a policy in here to start with. We'll add the policy later. We want a before and after to compare that with the life insurance policy. Next, debt priority. We have the two debts listed here, the two credit cards, Discover and Wells Fargo. One of them, the Wells Fargo, is at 0%, but only for 12 months. In 12 months, it goes to 12.99. So we're going to put this one as number one to pay off because the balance is nice and low. And number two is the Discover card. Once we have these priorities put in, we're going to sort the debts. And once that's done, we're going to click Configure Debts. And that's complete. What that just did is it transferred the information from our input here to a monthly model right here. So you have the Wells Fargo, you have the balance right here. We can come into the rate and adjust it here at the 12-month mark. This is the point where it goes to 12.99%. I hit the enter button on my keyboard to exit that cell. Then I click back on it, Control-D to carry that all the way down. And you can see the payment of $50 a month is already here. The Discover card is listed here, the balance, the interest rate, the payment, no changes needed here. Now that this is done, we'll go to the results. We have some columns here that we don't need, so I'm going to go ahead and take a minute to hide those. Simply select the columns from the column header all the way across to the ones that we want to get rid of, and I actually want to do a few more here. So I click and hold, move all the way over, and then I'm going to right-click and hide. And we have some more columns over here. Again, we click in the column header, drag the mouse as we're holding the mouse down over to this column. And then we're going to right-click in the column header and hide. So here's our results. The Wells Fargo loan is paid off in 24 months. The Discover takes a few more months, all the way out here till month 50. So everything is paid off at this point. And I could make a couple of notes over here. Like I might highlight this. This is the point he would be out of debt without a policy. And then after this point, the cash flow is accumulated here in the Money Manager account balance. So we see this balance going up, and this gives us a nice comparison point. So we can do apples to apples comparison. Now it's time to add the policy. We're going to do this in a separate case file. I'm going to close this case file out, and then we're going to copy it from right here. We'll paste it in the same location, and we'll name this number 2 with policy. We'll open this one up, and to add the policy, we simply go to the Policies tab here, and we'll put the information from the policy in right here. I have the PDF file pulled up right here. And we're simply going to copy these numbers, the premiums, cash value, death benefit, the dividend, over to the illustration. I'm holding down the Alt key, by the way, on my keyboard to be able to select numbers in a column. And I'm going to move that to my other screen so you can see just as we're putting the information over here. This was right above the subtotal, so I'll need to retype the 1460 for the 10th year. And then I can click on this, and since the premium stays the same for the rest of the 30 years, I can simply click on it, use Control-D to carry it all the way down. How many premiums per year? There are 12. These are monthly premiums. So again, we hit Enter to exit the cell, back to it, Control-D carries that down, and now I'm just going to finish copying over the policy values. And now that we have the policy values in here, I'm going to go ahead and give this policy a name. And notice we did not use row 0. This would be for an in-force policy for the values for the current year. One more piece of information I'm going to add over here is the policy loan interest rate. We can specify in advance or arrears. This particular company quotes in arrears, so arrears at 5%. We're going to enter, and then back to that cell, Control D to carry down, and the policy entry here is complete. Now, one thing I want to do is I want to be sure the $240 per month that we're putting into the Money Manager account goes to pay this premium. So we do that from the Money Manager account tab. We go back here, and I simply come in here. There's a few different ways I can do it. I'll do it one way first, and then we'll come back and change this a little bit different to make it cleaner on the spreadsheet. But one way to do this, check the yes box here to go ahead and pay those premiums. And now we're ready to look at the results. Now, in the last case file, I had hid the policy columns, so we need to make those show back up here. So I'm simply going to highlight the two columns. The policy columns will be in between these two. So I simply select those two, right-click and unhide. And now the policy columns show up. There's still a few here I don't need, like these. So we'll go ahead and hide those. And these over here. There we are. So this $240 a month coming into the Money Manager account now is going to pay the policy premium first. There's a few more changes we can make here. We wanted to keep a reserve of $5,000. Well, it's keeping this reserve of $5,000 in the Money Manager account, but we're also building cash value in the policy, and we might as well build our reserve there. We're going to make a few changes to make this happen. We'll put a $5,000 reserve in the policy, but obviously the policy doesn't have $5,000 of cash value in the first year. So we're going to do this in a few different steps. First, we'll go back to the Policies tab. We'll put in our hold for $5,000, and it doesn't matter how long we carry this out because we're not going to have a need to use the future years on this, so at least $5,000. We'll go back to the Results tab. Here at the end of year 1, we already have $1,445 here. So that means we can take $1,445 away from the Money Manager hold in the 12th month. So let's go back to the MMA column. We'll go to month 12. 5,000 minus 1,445. And we'll carry this one down. So now we go back to the results column here. And now we still have, overall, we still have our reserve of $5,000, but it's in two different accounts. So that works nicely. We'll go down here, cash value increases again, month 24. So we'll go back and put that in. 5,000 minus 452. Carry that down. Go back to the results. And then by the end of the next year, we don't need any reserve at all. So that's going to be month 36 in the Money Manager account. And then I just used the Control D shortcut to carry down that blank cell once I'd cleared the contents with the delete button. So now our balance in the Money Manager account is slowly decreasing as our policy cash values build up. And that keeps us from having to use a policy loan to pay down the debt. We might as well let that money sit in the policy as our reserve. So we do take a policy loan down here in month 36 in the third year to help pay down the debt. Wells Fargo's paid off month 36 there, and the rest of the debt is paid off at month 60 now. Notice that was the 10 months longer. So we're going to put our out of debt row right here. I'm just going to select those columns, unformat those, no fill. We'll take this out, and let's see how quickly the policy loan's paid off. Pretty quickly. So down here in month 72, so it takes another year to pay off the policy loan. I'm going to highlight that one in green. Maybe these months over here so we have a reference. Then over here I'm just going to put policy loan paid off. Very similar, once the policy loan is paid off, then the extra money that can't fit into the policy again starts accumulating here in the Money Manager account. Now there's still one more thing we can do to clean this up a little bit. You notice here that we're putting in the $240 a month into the Money Manager account, and then it's used to pay the premium. Well, if we want to get rid of these numbers so we can have as few numbers on the screen as possible, then we can simply take this out and let the policy and show the 240 going straight to the policy. To do this, we'll go to the Money Manager account, and we will turn off paying the premium out of the Money Manager account, and then we'll simply come in here. We'll take out the 240 and Control D to move that and clear out that column. There's still a little bit more that we can do. Let's go back for a second. The premium on this policy drops down. I think it's in year 8 right here, month 85. So we need to take the difference there. That's 240 minus 121.67. It's $118.33 extra per month. If we want an apples-to-apples comparison, we need to put that $118 into the Money Manager account so that when we compare it with our last case file, the cash flow is identical. Let's go back to the Money Manager account, scroll down to month 85. Be sure you're referencing the month column right here in the green and not the row, because the row number will be a little bit different than the month number. 118.33. Enter, click back on that cell, Control D, keyboard shortcut, That carries down. And now let's go back and look at the results. Scroll up to the top again. Very nicely, that cleaned out this column. We still have our reserve. We still pay off the debts in the same amount of time. Policy loans still paid off at the same point. And this $118 now comes into our money manager account beginning month 85. So we have an apples to apples comparison as far out here as we want to go. There's one other way we can look at this here, and that is with a chart. If I go to the charts tab down here, I have the values graphed for this particular case file. We can see the total counts going up. This includes cash value and the money manager account balance. And then here in the light green is the net death benefit. So this is the death benefit protection he has from day one. Obviously, it increases a little bit over time. We want one other set of numbers here, and that is the numbers for the example without using the policy. How quickly would he have paid off his debt? What would he have had to show for it? That would be the total accounts right here. I can easily get this by going to the first case file, which is right here, and we'll simply copy the numbers out of here and paste them into the row for the second scenario right here. There we go. So now you can see the orange line. We can give this this series a title. We'll call this No Policy. So obviously, there's a little bit more money starting out without the policy, but 15 years into this, the policy is pulling ahead, even over the extra interest that we paid to the banks and on the policy loan, and it's ahead from this point forward. Plus, he has the death benefit protection all along the way. Leave a comment below with any questions. Enjoy.